Form 8863 is where you claim the two education credits, the American Opportunity Tax Credit and the Lifetime Learning Credit. Before you even compare them, remember the universal no-go rules. On the EA exam, they love quick disqualifiers. If you're married filing separately, can be claimed as a dependent, or your income is over the phase-out, you're done. Next, lock in what counts as qualified education expenses. Think tuition and required enrollment costs. Required books and course materials can count, but personal living costs don't. And here's the trap. You must reduce expenses by tax-free education assistance, like Pell Grants, tax-free scholarships, and employer-provided assistance. You can't double-dip the same dollars. AOTC is usually the bigger and better credit if you qualify. It's up to $2,500 per eligible student. The math is baked in. 100% of the first $2,000 of expenses plus 25% of the next $2,000. And it's partially refundable, which is a big exam favorite. Up to 40% of the credit can come back even if you owe zero tax. But AOTC has strict eligibility tests. The student must be in a degree or credential program. They must be at least half-time for one academic period during the year. No felony drug conviction, and you only get AOTC for the first 4 years of post-secondary education. Miss any one of these, and you're looking at lifetime learning instead. Lifetime learning credit is the flexible one. It's 20% of qualified expenses up to $10,000, so the max is $2,000. But it's non-refundable, so it can't create a refund by itself. The trade-off is looser rules. No workload requirement, no degree requirement, it can be undergrad or grad, unlimited years, and even a felony drug conviction doesn't block it. Now, the planning rule that shows up in tricky fact patterns. You can't claim both AOTC and lifetime learning for the same student in the same year, but with multiple students, you can mix and match on one return. Example. Your dependent freshman might qualify for AOTC while you're in grad school and only qualify for lifetime learning. Here's the fastest exam decision tool. If the student is in the first 4 years in a degree program and at least half-time, AOTC is usually the first thing you try, especially if refundability matters. If the student is part-time, taking job skill courses, in grad school, or already used 4 years of AOTC, lifetime learning is the fallback. Nadia and Ethan are married and filed jointly. Their joint AGI is $88,000. Nadia pays $2,650 of student loan interest, and Ethan pays $4,900. What is the maximum student loan interest deduction they can claim on their joint return? Options include $5,000, $2,000, $2,500, or $7,550. Think about it. The answer is $2,500. Student loan interest is capped at $2,500 per return, not per person. The tempting wrong choice is $5,000 because it sounds like each spouse gets their own cap. But on a joint return, the couple shares one limit, so anything above $2,500 is non-deductible. Which fact will not disqualify a taxpayer from claiming the lifetime learning credit? Possibilities include the taxpayer is claimed as a dependent, the taxpayer's AGI is above the limit, the taxpayer files married filing separately, or the taxpayer's spouse is a non-resident alien who elects to be treated as a resident for tax purposes. Think about it. The correct choice is the non-resident alien spouse who elects to be treated as a resident. That election, by itself, doesn't block the lifetime learning credit. The other options are classic disqualifiers. The EA exam loves being claimable as a dependent, filing married filing separately, and being over the AGI limit.